were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Hello and welcome. You're watching Buy Now Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is your show where you get a chance to get all your stock related queries answered by the experts. So stay tuned for that. But before coming to that one, let's have a look at what the markets are up to. So Cheryl, the markets are really matching the color that you are wearing right now.
Absolutely. Looks like it. And I totally forgot about the fact that the markets are declining. Good morning to you, Shrishti, as well. Not a great morning coming in for the benchmark indices. As you can see, 0.8% down coming in for the benchmarks, and we've just drifted lower from the word go. We have slipped below the 18,000 mark as well. You have the Nifty Bank that's actually underperforming the benchmark indices. Nifty Bank at this point in time is down over 1%. Let's take a look at what are the other sectoral indices doing. And PSU Bank Index, that's the one that's seeing the biggest brunt in today's trading session. 2% downtick coming for PSU Bank Index. IT Index, on the other hand, is seeing a dip about 1.4%. Remember, the TCS reported its Q3 numbers yesterday. And not to forget, you had the IT Index that rallied over 2% in yesterday's trading session as well. Apart from PSU Bank, IT and the banking sector as well, you have declines coming in the power space as well. Mid-cap index and small-cap index are declining, but they are actually outperforming the benchmark indices. Mid-cap index is down just 0.3% as we speak. Small-cap index, I believe, 0.3%, and mid-cap is down about 0.4%. On the flip side, you have auto sector that is roaring ahead, but with gains over 0.7%, and so is metal index seeing good gains. But on the Nifty, if you have to pinpoint one particular counter that is soaring at a pace that was at the biggest intraday gaining since August 2022 is Tata Motors. And Shrishti, you track the sector very closely. You've been able to go through what exactly Tata Motors had to say yesterday late in the evening when they came out with their release. What are the details of that, and what is actually making the stock spike in trade?
Well, yes, absolutely. Very well highlighted, Cheryl, that the stock is definitely one of the top gainers in Nifty 50 today. And the most important highlight out of the press release, definitely the numbers on the retail as well as the wholesale side are positive. But other than that, look at the guidance coming in on the cash flow trajectory, because all this while cash flow and the debt position, these two factors were the most concerning factors for Tata Motors. But now what the company is saying, that going forward in Q3, finally it's the time where they can report a positive free cash flow number, and that the number that they are guiding for is 400 million pounds. Because remember, in Q2 the company said that the cash flow levels are nearly about break even. The loss has narrowed, but now after narrowing that loss, we are seeing the cash flow moving in the positive trajectory, and that's the biggest trigger point when it comes to Tata Motors. Now let's talk about the numbers. So firstly, on the wholesale's number, the chip shortage situation is seen to be improving. So on a YY basis and on a quarter-on-quarter basis, the company has reported a growth, and all across the geographies we have seen this growth coming in, except China. On the back of COVID impact, the wholesale number is around 79,000, close to that number, 79,591 units. And when it comes to the retail sales data, on a YOY basis, we have seen a jump with the sales clocking around 84,827 units. So definitely the numbers are on the positive side, but the guidance on the cash flow levels is something that's triggering the rally in Tata Motors.
All right, and that is Tata Motors for you, but let's talk about another stock from the Tata stable, and that is TCS. They came out with their numbers yesterday, post-market hours, and I have Anisha, who's done all the number crunching and who's heard the management live as well, to tell us exactly what are the key takeaways. Anisha, over to you.
Well, the stock of TCS was already up around 3.5% yesterday, so the reaction today is not completely, coming in as a surprise. Yes, there was a special dividend that was expected to provide support to the stock price today, but that clearly hasn't happened. Why is that? Well, the street is worried about the growth concerns and growth outlook for FY24. And the two lead indicators of growth are basically headcount as well as deal wins. And both of these have tad bit disappointed the street. With respect to headcount addition, it was actually a decline of around 2,200 headcounts, telling you that they're slowing down their, headcount addition. And that is perhaps on account of the demand slowdown that they're witnessing. And that's quite visible as far as the deal win pipeline is concerned. It was actually steady at $7.8 billion. You can't complain much. But the fact that the book-to-bill has come down to 1.1 times is something which is worrying the street. However, having said that, after listening to the management commentary this morning, I'm a tad bit more optimistic because they did talk about how FY24 can sustain the double-digit growth, because that is the biggest question that the street wants answered. And separately, attrition is something that is slowing down as well, and that should trickle down into the margin figures, because this time margin also was a bit of disappointment, but Samir Seksaria maintained that they are hopeful of achieving 25% margin band by end of this year. And going forward, the long-term target is 26 to 28%. So overall, I think it's only the long-term concerns which is actually worrying the street a tad bit. But Q3, it wasn't that big a miss that we should be seeing 2% decline today.
Right. Thank you so much for that, Anisha, for putting into context what the numbers look like. But let's hear out from the management of TCS, our ET Now's editor and ET Now Swadesh is managing editor, Nikunj Dalmia, caught up with the management to get their take on the road ahead for TCS. Here are what they have to say.
Last time when we spoke, and I'm going to quote you here, you said you see a strong possibility of a double-digit growth. Is there still a possibility of double-digit growth, or possibility has become a probability?
As a management team, we are always focused on that. I think that has been the statement that I've always maintained, and there is no point in saying that we don't want to focus on double-digit growth. It's not going to. It's like shooting on my own feet, right? So as a management team, we are focused on getting to that double-digit growth all the time, barring certain really uncertainties that play it. I think we should be able to achieve that.
All right, so that was the take coming in from the management of TCS. The fact that they have said that they definitely see a possibility of a double-digit growth in FY24, and they've also said that they are aiming the EBIT margin exit rate at 25% for the year FY23. But let's get on board our experts for today to understand what are their take on TCS, where they see the road ahead for this tech major. We are joined by Kunal Bothra as well as Rajesh Agarwal. A very good morning to you, Kunal, as well as Rajesh. Thank you so much for joining us on Buy Now Sell Now. Rajesh, first coming to you. A lot of key takeaways coming in from that management commentary, management interaction with TCS, the fact that they see a possibility of a double-digit growth in FY24, talking about the fact that a reduction in headcount should not be seen, that there is something to do with the demand outlook. Also, the fact that they have announced a big special dividend. All of these factors, how do you see TCS performing going ahead? And do you think that this will continue to be that IT bellwether that you can bet on?
Good morning, Sharil. Good morning, Shrishti. Good morning, Kunal. We believe that TCS would be a bellwether and should be there in one's long-term portfolio, both TCS and Infosys. But at this point of time, buying new wouldn't be as advised, because we think that some amount of correction might happen. But we have a one-year target of 3,400. As far as numbers are concerned, revenue was better than expectation. Dollar revenue went up by 2.9%. Constant currency went up by 2.2%. Margins, yes, they were slightly lower than expectation. And earnings were lower than expectation, but that was due to lower other income. And the guidance was very impressive. They have clearly said that they are looking for double-digit growth. But then TCS has always given an impressive guidance. Attrition rate was down. That was the best part, I would say, 600 basis point to 21.3%. And going forward, we believe that although the headcount is down, there are caution in Europe, that that accounts for around 15% of revenue. But still, going by the past history of TCS, the kind of performance, the kind of quality management that has, we are positive on the company, and we would advise our investors to take a buy on dips kind of strategy, have a long-term horizon of maybe 9 to 12 months with a target of 3,400.
Well, yes, the guidance is positive by the management, but it is not the right time to enter. It's a buy on dips declining strategy that you should be following, and that's the fundamental take coming in on TCS after Q3 earnings. But Kunal, coming to you, a lot of these counters from the likes of TCS, Infosys have shown some breakouts back in the month of December, but this seems to be a failed breakout. But after so much of decline, do you feel that going ahead, a buy on decline strategy could be adopted when it comes to technicals as well and stock picking?
Good morning, everyone. Yes, I would believe so. That I think TCS, large cap names like Infosys and even HCL Tech, I'll probably add that to the list as well. I think these are names which one should be looking to add on dips. So the important highlight for the stocks is the near to medium term trend. Now look at it this way, that at a point when there has been global sell-off, at least in the FANG stocks, many of the tech names and our tech stocks have not even hit back their December, I think September, October lows for themselves. So that's a strong indication that they have come back again above their major support points. Now the news flow, which is getting a bit included into the stock price, also indicates that the stocks are now trying to absorb all of the negative news flow and still holding on to the higher levels for the stock themselves. So I think all in all, it's a very strong indication. The fact that these stocks are not retesting their previous major lows, they are not susceptible towards the market volatility, and if they can absorb these minor shocks or minor price corrections, even with remaining in a tight band as such, I think that could be a strong indication that the trend and the tide could probably be reversing for these IT names. So I would be bullish on most of these IT stocks, and I think a buy on dip strategy is a good strategy for medium to long term investors.
Okay, so that's the consensus coming in. Buy and decline strategy could be adopted for medium to long term for say. But with this, it's time to slip into a short break, but don't go anywhere, viewers, because we'll be right back in then the time to take all your stock related queries, so stay tuned.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC
Welcome back. You're watching Buy Now Sell Now on ET Now, and this is the show where we get you answers for all your stock-related queries. You can write into us on YouTube, Facebook, as well as Twitter, on which we are actually live right now, and as well as you can write to us on the WhatsApp number that will be flashing on the top of the screen. Do mention the name of the stock that you're looking and you're seeking an advice on. Mention the time horizon that you intend to hold the stock. Also, if you already purchased, then mention the buy price as well as the horizon that you want to hold the stock for. But before we get on with your stock queries, Rajesh, coming to you, a brand new year, a brand new strategy is actually advice for everyone when they have to make sure that they protect their wealth. So for retail investors, what's your advice?
You said it right, Cheryl. It's a brand new year, and one should take new resolutions for everyone, their life, their investment. Although it's too late, it's 10 days late for New Year resolution. But as they say, better late than never. Jag jaago tabhi savera. So one should make a long-term committed resolution in terms of investing in the stock market. I would say the first resolution would be, whenever one buys stock for a long term, one should never watch price fluctuations, because fundamentals are more important for a business, and price always follows earnings growth. And the second one should be, whenever one buys stock for a short-term trading purpose, one should always follow strict stop loss or the resistance that has been, the targets that has been thought about, because you should not let greed or fear overtake your emotions, and that should be followed for short-term trading. And the third one should be that the most important is allocation should be into 15 to 20 stocks, and only in quality fundamental stocks, not on hearsay. So these three resolution one should follow for always, not for this year, for always, I would say, and discipline, principle, and patience. I'm sure that's going to create long-term wealth.
So that's the advice coming in for all our viewers. But let's move on and start taking all your stock-related queries. And the first question that we have is coming from MG Radhakrishnan and Kunal. Let me take it from you. This is specifically for you. He's holding 200 shares of Muthoot Finance at a price of 1400. Is that a buy or is that a hold or sell at these levels?
I would suggest to hold on Muthoot Finance. I think the stock is trying to make a comeback. It's struggling to break past about the 200 moving average, but then I think off late the stock has been just trying to come as close to the 200 DMA as possible. So I think whenever that breakout happens, the intensity of the rally on the upside could increase for Muthoot Finance. You can hold on to the stock. I would not suggest an averaging out at current levels, but in case if the stock or whenever the stock breaks past about the 1150 mark, which could be a major swing breakout, I believe the pace of rally could increase up higher. So you need to average about 1150 mark, not at current levels.
Okay, the next one is for you, Rajesh. Coming in from Nino, he wants a long-term outlook on HG Infra. I'm unsure if Nino has already invested in it. Considering that he's already invested, how should he view the fundamentals for this counter? And if he's not invested, then do you think that this one makes a sense?
No, but if one is not invested and planning to buy, I don't think that would be a right choice in infra. I would say one can look at larger names at this point of time. We believe that since this budget is going to be the last budget of the current government, maybe their focus would be on infra, rural space and all those such things. But being in a large cap would be a better strategy. If somebody already invested, I think 720, 725 would be a better level to book at least partial profit.
Okay, moving on to the next one. Rajesh, this one is from Sandeep. He's holding 250 shares of Nykaa at a price of 168. Currently at a loss, so he should hold on to this counter or book loss?
See, all these new age companies have seen a massive cut from their highs, I would say. Nykaa is one such company. And I believe there are a lot of negative environment for these kind of companies because of losses and all those things, cash burning. But Nykaa is one such company which is still into profit. The profit is very meager, and they are moving into offline also. They have opened around 80 stores in 40 cities, and they have acquired some big brands. But again, I would like to reiterate that these kind of companies are full of risk. This kind of investment, I would say, one should have a very small percentage of their portfolio in Nykaa if somebody is ready to take. Somebody has got a good risk appetite. Otherwise, I would say keep a stop loss of 140 and continue with your holdings.
All right, Rajesh, next question is to you, a bit longish one, and this one is coming from Soumitra, and he wants your view on the IPO market in particular. I will read his question as he's posted. He's asking and he's saying that would request a view on the IPOs now being launched. Earlier, businesses launched an IPO to get money in order to expand their businesses. While now it seems that most are being treated as a gateway to provide initial investors exit, and is generally done at a time when within the next 6 to 12 months, the growth of the company slides and generally from high to normalize. So he wants your view on the IPO market. Do you also visualize it the same way? Are you also seeing some similar sort of a trend coming in for these IPOs? And this, I believe, is particularly linked to the IPO, the DRHP that has been filed for Mamaearth.
See, the question is very right. A lot of issues in the recent past which we have seen is totally OFS or 75% OFS and some small portion goes to the company. If it's a total OFS, obviously it's an exit route given to early investors which have invested in a very nascent stage or in a very low valuation. They are just given an exit route. Sometimes the valuations are too stretched, leaving nothing on the table. And we have seen a lot of IPOs after listing seeing a cut of 40-50%, sometimes even more. So one should have to look at the quality of the company, whether the company is going to do well, whether the fundamentals are strong, or even the valuations are justifying the kind of price which is being asked in the IPO. One should not forget that it's a two-way market. The seller would always like to sell in a higher price. Buyer would always like to have in a lower price. So it depends on what kind of valuation it is coming. If it's an overstretched valuation, one should wait for the stock to get listed and then buy from the market if he gets in the right price. That should be the strategy. I think full focus should be on fundamentals. And if it is only OFS, nothing is going to come into the company. So that's not going to add to any expansion or any performance improvement of the company or any debt reduction. So fundamentals are not going to change due to OFS. So one should have a look at fundamentals, the kind of growth opportunities it has, and even the valuation on case-to-case basis.
Okay, moving on to the next one, Rajesh, once again with you, because Subrata Ghosh is holding a counter. We don't discuss much about this one. The name is AGS Transact. He's holding 5,500 shares at a price of 108. Currently, the stock is somewhere close to 70 rupees. So, do you track this one, and will you be able to advise him?
I'm sorry, Srishti, we don't track this.
Okay. So, Kunal, anything on the charts that you can spot on for this one?
Don't track it, but I think you should probably look to exit these kind of stocks or not invest into these kind of names.
Okay, next query is from Santi coming to you, Kunal, and this one is on CMEC. Now, what he's saying, and I quote him, he's saying, surprising me that today's price momentum without volume, 15 minutes candle shows 875 to 983 levels, and now it is trading 2% down. This is when he had written the query. This stock is in his buy list, so he wants to know how should he understand this fake candle. He's requesting your technical view in order to decide on accumulation for medium to long term.
So I think that could probably happen in terms of a very quick kind of trades into these illiquid kind of stocks. It's very difficult to answer why such kind of candles they happen. But the more pertinent question is that what is the impact it leaves into the stock price, and I believe that the impact would still be a bit negative, because even after such a kind of a steady uptrend which had happened probably on an intraday basis, the stock is unable to hold on to the higher levels of 980 plus and gets easily caved into the selling pressure. That's a sign of weakness. So you should ideally avoid such kind of names.
Okay, moving on to the next one. Rajesh, this one is for you. Krish from Chennai wants to know what are the prospects looking like for PI Industries? He's already holding 100 shares at a price of 3,100. So is this worth holding for the next 3 years to have some decent returns?
Of course, it's a very good company, strong fundamentals. This is into pesticides and agrochemicals. The working has been good. And as we said some time back, as I said, that this is going to be the last budget of the government, and the focus should be on rural and such kind of things. So companies related to rural theme would be benefited. I think one can continue to hold with a target of 3,600 in the next 6 months.
Okay, this one is coming from Madhuri. This one is for you, Kunal. Please suggest an entry level for Titan and Tata Lexi for the medium term, and the medium term that she's terming is 1 year. And also she's asking, do you see further scope of correction in both of them?
So Tata Elxsi, yes, I would suggest to avoid the stock at current levels. I probably expect the stock to get into further leg of correction. It's still not settled into any kind of a trading range as of now. So that could probably be indicative of some bit of more correction from here on. So I would suggest to avoid the stock. For Titan, on the other hand, if you're looking at a buy zone, then I think 2,400 could be a good point to try and buy the stock. I think it could be just about few percentage points lower than the 200 DMA for the stock price. And looking at the recent slow steady trend for Titan, I believe that there could probably be a touch and go movement towards the 200 DMA or slightly below that. So probably around the 2,400 mark could be a good entry point.
Okay, Rajesh, the next question that we have is coming from Tapas Chandra. He's holding two counters. Firstly is sale. The buying price is 131, currently at a loss. But the other one, he's sitting at a mild profit. The counter is Lao Pala, 70 shares at a price of 350. The stock is currently at 393. He wants to know the prospects for the next 1 year.
Both are a hold from our side. Even for Lao Pala, of course, if it corrects some more from these levels, maybe around 350, 360 odd levels would be a good level to buy. The numbers have been good. It's a good brand and doing very well. As far as sale is concerned, a lot depends on how China performs on the metal front. But purely on fundamentals, I think this is a reasonable price, around 85, 90 odd rupees to buy fresh into the counter for a target of 105, 108 in the next 6 to 9 months.
All right, on that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. But stay tuned. When we come back, we continue taking your queries, so don't go anywhere.
Credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and flashing at the bottom of your screen is the AMFI data for the month of December. And if you look at the initial figures that we're getting in, the net inflow is coming at around 4,491 crore rupees as opposed to inflow of around 13,264 crore rupees that we witnessed in the month of November. The equity inflow compared to the November month in the month of December has seen an uptick as well, coming in at around 7,303 crores. Totally, AUM is at about 40.8 lakh crore rupees versus 40.5 lakh crore rupees in the month of November. To talk more on the numbers, the AMFI data, what can one actually kind of make out of this, we are joined by Mr. Swaroop Mohanty, who is the CEO of Mirae Asset Global Investments India. A very good morning to you, Mr. Mohanty. Thank you so much for joining us on ET Now. Talking about the initial numbers, yes, you had a volatile December month coming in, but the heartening fact is the fact is to note is that we have definitely witnessed a net inflow of around 4,491 crore rupees.
Yeah, I think when I look at the numbers, I think the broad gross net equity is showing around 7,300, and you add hybrid to it is around 2,255. So broadly looks in line. The good part is if you look at the gross purchases around almost 30,000 crores into equity, add another 15,000 hybrid, that takes it up around 45,000 crores of equity purchase, which is good. I mean, the debt side, of course, is reflecting the volatility of the interest rates, and it's a quarter end, so some amount of the liquid money would have gone out. But broadly, yes, it looks good. I mean, we had seen one volatile month before that, but some sanity seems to have prevailed. And on the passive side, there's a lot of money coming into the target maturity fund. So the thing that one has to notice in this inflow is that slowly but surely there is a shift towards mid and small cap buying. People should understand that buying mid cap and small caps do add or increase the risk of their portfolios. I hope people are conversant with that, with the kind of buying that is having vis-a-vis the multi cap or the large cap sort of inflow is a thing which we have to keep in mind.
Okay. Hi, very good morning, Swaroop. This is Shrishti joining in. So the numbers look in line to you, but very interesting point highlighted that the shift is now towards the mid and the small cap end of the market. But other than that, even the debt category has seen an outflow. Going ahead, what is your outlook on this one? Because seeing the volatility in the markets, a lot of analysts were highlighting that the debt could be the category for 2023. So what are your views on this for the numbers that could shape the industry ahead?
Shishti, you've hit upon a very interesting point. And my personal opinion is, as investors, people time debt more than they time equity. Over the period of time, investors have started matching their investment horizon to the investment horizon of equity as an asset class. And that is why we've been seeing this dramatic shift, and a lot of it due to the SIP that is happening. But in debt, it is a very short-term kind of an approach, and a little tweak on interest rates or the broad economic environment just takes money out of the table. And that is something we are witnessing at the when you look at the broad category-wise numbers. But incidentally, what's also happening is a lot of money is going out of active long debt and getting locked into the target maturity funds on the passive side or in the index side. It is a good time for people to lock into some of these yields, and I think they are taking this opportunity to do that. So as long as they are taking this opportunity to lock in the yields, it doesn't matter whether it's going out from here or there. But broadly, I think people are yet to match their investment horizons to the investment horizon of the fund. It is still a very market-timed kind of an approach of investing in debt in India.
All right, we'll leave it there, Mr. Mohanty. Thank you so much for joining us on ET Now to talk and give your initial take on the AMFI data for the month of December. Thank you so much for joining us on the show. But viewers, we will continue taking your queries then. And let me get back to you, Kunal and Rajesh. And this one is actually coming in from Sri Kutan. And Kunal wants to know if it makes sense to buy Jyoti Laboratories at current levels. And also he wants to know about a good level that he can look to enter this one.
Well, you can look to buy, but I think a better level to buy the stock would be maybe closer to 185, 190, 184 to be precise. I think is a good support for Jyoti Laboratories. The stock, at least over the last 4-5 months, has been bouncing off from those levels once or twice over that kind of a time span. So I think 184, 185 approximately could be a good level to buy. But then I think just to keep it as a broader term range, below 190 is where you can start buying, and closer to 184, I think you should be looking to allocate your full deployment over here.
Okay, moving on, the next question, Rajesh, is from Senti Wheel. He's holding almost 1900 shares of Ugro Capital at a price of 174, currently at a huge loss. Do you track this one, and will you be able to advise on this counter?
See, the numbers were good, but now since due to the interest rate and all, the margins are under pressure. The business is not growing as it was doing in the past, and the AUM is also slightly muted, I would say. So it's better to be better to exit at this point of time into Urgo Capital, and maybe switch to some better names like EB Capital or Bajaj Finserv. Bajaj Finserv, which I've seen a lot of cut in the recent past, has come to a quite attractive level, I would say.
All right, this one is coming from Vishal, and Vishal wants a fundamental view on Balaji Amines. Rajesh is already holding 15 shares, wants to add some more. So he wants to know whether it makes sense to add this one at current market price. One, fundamental view, and also right time to enter, do you think, Rajesh?
See, this is one company that has given phenomenal returns, I would say, in the COVID period. It has corrected quite a lot from its highs, and I think 2,500 is a quite attractive level for a long-term investor to invest into this. The company is doing very well. The products are good. Expansion has been done. 2,500, 2,450 would be a good level to enter for a target of 3,000 rupees, but the time horizon should be 9 to 12 months.
The next question is for you, Kunal. Rajendra wants to know, for the short-term perspective, can he enter into Tata Steel? And if yes, then what could be the likely target price that he should be looking out for?
Well, I think you should not be into hurry into buying the steel stocks as of now, and specifically for Tata Steel. I think the stock can get into a mild correction from here on. So I think a better level to buy Tata Steel, in case if you're looking at, would be at least a 50% retracement of this recent rally. The recent rally started off from 102 to 120. So maybe closer to 110, 112 levels is where you should look to buy Tata Steel.
All right, this next query is coming in from Sagar. He wants a combo view on Petchem space. He's holding a nice chunk of Agarwal Industries from the sub 120 levels. He's saying that the stock has performed good till now, but he wants to know whether he should sell or exit, or some more teams left in this particular counter. That question will be directed to you, Kunal. On the other end, he wants to know about the margins and the earnings expectations from the Petchem space, Rajesh, because he believes that the crude has actually fallen from its highs and the chemical sector is under pressure. So he wants to know what sort of a margin trajectory can one look at, or earnings growth trajectory that one can look at for the Petchem space. So Kunal, do you track Agarwal Industries, and you want to go first?
Yeah, I think you should look to exit. The stock has shown considerable weakness in the last 3 months. I think the October highs for the stock was 750. Currently, the stock is trading at 575 approximately, and it's reeling below the longer term averages. So chart patterns are not very attractive for Agarwal Industries. If you're sitting in good profits, I think it's a good time to book out.
All right. And Rajesh, then what's your take on the entire Petchem space, especially when it comes to the margin figure or the earnings growth expectations that you have penciled in?
See, of course, it's a very positive news for the industry as such, because crude prices have cut quite a lot from their recent highs, and that would directly or indirectly reflect in the bottom line of the companies, improving the margins. But I think that would take a lot of effort. Some of the companies might be having inventory with them. So I think this quarter the margins won't be that positively surprising. There will be some minor upsides, but in the next quarter we are very positive about that.
To the next one, Rajesh, Hemant wants to know the fundamental take on Indus Star. He's already holding this counter, 72 shares at a price of 226. So should he average at these levels?
Hello.
Yes, Rajesh, can you hear us?
You said Indus Star, right?
Yes, Indus Star. Hemant is holding this counter at a price of 226.
See, I don't think any reason to be into this company. There have been always been news of somebody taking over, the tower business doing well, but the fact remains the stock doesn't perform at all. And I don't believe in the near future it is going to perform. It's better to exit this counter and maybe move to some other better names. If one wants to be in telecom, I think Bharti Airtel or Reliance would be a better play.
Okay, this next one is coming in from Jai Krishnan. Kunal wants to know, for the medium term, which one would you prefer, Titan or DV's Laboratories? And also if you could suggest a safe entry level. I know we've spoken about Titan already, but do you want to talk about between Titan and DV's, which one you prefer?
So both are attractive stocks. They need to be part of your longer term holdings, longer term portfolio. But then I think when you're looking to buy these stocks, I believe there should be more correction in play for Titan. I just alluded some time back that 2,400 could be a better level to buy Titan. DV Slab on the other hand, I think it's better that you buy the stock on a breakout. I think breakout for the stock is pending at 3,600, 650 mark for DV Slab. So I think above that level is where you can look to buy. but for Titan, on corrections closer to 2,400 levels.
Okay, Rajesh, the next one is from Prasad Reddy. He's holding over 1,600 shares of Zomato from a price of 64 rupees. Would you suggest to add some quantity at these levels, or rather sell half of the quantity once it gets back to his cost price?
See, as we discussed some time back, that these new age companies are burning cash, they're not into profits, they're still into great losses. And there are no reasons to believe that in the near future the bottom line would turn black. And the worst part is there is huge competition in the business. So customer loyalty is nil. So there's no point adding to these kind of companies at this point of time unless there is some improvement in the performance. So I would say try to exit on rise.
This one is coming from Rajesh Maheshwari, writing to us from Indore. This one is for you, Kunal. He's asking about ICICI Securities. He has about 300 shares, which he's purchased at a level of 530 rupees per share. He wants to know how is the short to medium term outlook for this one in particular, as all the AMCs are giving negative returns.
Yeah, even for this stock, it's a bit difficult to preempt any kind of a major up move. I think the stock has been struggling. 2021, the high for the stock was, I think, around 895 to be precise. From there, the stock had corrected to as much as 400 levels, which means a correction of more than 50% for ICICI Securities. And even in this recovery from the 400 levels, the stock is at best recovered towards 500, 550 mark. So which means it's a very shallow correction as compared to the shallow rally as compared to the sharp correction the stock had seen. So that's a sign of weakness. And I would believe that this sluggishness as well as weakness would continue for ICICI Securities. I think you should avoid.
All right, that's the take coming in on ICICI Securities. The time for a break on this edition of Buy Now, Sell Now. But as we slip into the break, take a look at what is happening with the markets at the day's lowest point as we speak. We have Nifty that has drifted much more lower, 1% off the day's highest point, and so is Nifty Bank, down about 1.5% from the day's highest point. We'll be back after this break.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well.
Welcome back to Buy Now, Sell Now, and let's keep it going with all your stock related queries. And Rajesh, the next question is coming from Padma Sevirao from Bangalore. He wants to know, is this a good time to enter Schneider Electric, and does it has anything to do with electric vehicle, because the stock has been rallying quite fast in today's trading session, is also up around 12%.
See, it's a good company, no doubt. The fundamentals are strong, balance sheet is strong, cash positive. I think for a longer term portfolio, it suits the bill. But adding at this point of time won't be suggested. Maybe some amount of correction, 180, 185 levels would be a good level to enter. As far as EV is concerned, a lot of companies are trying to enter into that, but it's too early to commit whether EV venture is going to be positive or how it pans out. But it's too early to comment on that or take a bet on that, I would say. But otherwise, even without EV, the company is very good.
Now, next one is for you. This one is come for Shanmuga Sundaram, and he wants to know about Tata Power. He has 600 shares at a price of around 220 rupees per share. He wants to know whether he can hold on or rather add some more for a 1 year period.
Yeah, I think you can look to add, but then I think 200 or below could be a level where you can look to add. I think last week or the week prior to that, the stock had fallen below the 200 mark and then jumped off or bounced off quite steeply from those sub 200 levels. So that tells you that the 200 mark or slightly below that is a good demand zone for Tata Power. So it's always better to try and buy the stock closer to the strong demand points, and that would be sub 200 mark.
Okay, but moving on, and it's time to start the rapid fire session. And Rajesh, the first one that we have is from Azamat. He's holding Patanjali Foods at a price of 1400 and currently at a loss. What to do?
So exit on price.
Okay, Anil wants to know about BLS International, 1000 shares at a price of 169. Can he hold for the next 6 months, Kunal?
I think it's a good time to book out profits.
Okay, Kunal Shree is holding Nalco, 450 shares at a price of 95. Is that a hold or sell?
I would suggest a hold.
Rajesh Tripta wants to know that does it make sense to buy Shakti Pumps at current market price, keeping in mind the rural theme?
Yes, one can buy as a budget play for a target of 450, 460.
Okay, Rajesh, the next one is from MVS Rao. He's holding shares of Bajaj Finance from a price of 7200. Ready to be a long-term investor? What to do?
One can add at this point of time. I think the news has been fully discounted.
Okay, this one is from Dasaradi. He wants to know about Delta Corp, 300 shares, 200 at 219 rupees per share. Worth a hold or exit, and exit at what price, Kunal?
I think you can look to exit and exit at current levels.
Okay, Rajesh, Yamuna has bought Sequent Scientific at a price of 191. The stock is almost half from its purchase price. What to do now?
You have to exit on rise. I don't find any reason to believe more than 100. So around 100, I need to exit.
Kunal, Jeevan is holding 2,000 shares of Ashok Leyland at 150 rupees per share. Should he continue to hold or exit for the next 3 months? What should be the strategy?
I think you can continue to hold on as of now, but then keep a stop loss closer to 145.
Okay, Kunal, Sudhir Jain has bought Grasim January futures at a price of 1740 rupees. What to do?
You should look to exit on minor rallies for Grasim.
Alright, Shobna wants to know which is the specific stock in the FMCG that can be looked at for this year 2023, Rajesh?
ITC. ITC would be the one. If you are looking for pure FMCG, then Davar would be the other one.
Okay, Rajesh, Yoga Rani is holding Canara Bank shares at a price of 300 close to about, what to do?
If your funds allow, you can even add to that. The bank is doing very well. We have a target of 350.
All right, and with that, we come to the end of the rapid fire as well as the query segment. Thank you so much, Kunal, as well as Rajesh, for joining us on the show and taking our viewers through how the prospects look for TCS as well as resolving their viewer queries. And viewers, at Times Network, we are always looking to create investor awareness and make financial matters simple for our viewers. And keeping up with our values, we present the second season of Nivesh Ke Fund Day. And on this edition, we take a deep dive into the world of index funds.
The pandemic has seen a number of Indians turn to the financial market to invest their wealth.
Yes, but many have wanted to follow a passive route of investing.
Absolutely. And they have been able to do so by investing in index mutual funds. But Aisha, how does one know if they are investing in an index fund or actively managed fund?
Well, it's quite simple. Index funds mimic a stock market index like the NSE Nifty 50 or the BSE Sensex. So your investments are only in the stocks that are part of the index.
And the investments are made in stocks replicating the same weightage that they have been in the index against which the funds are benchmarked. And since the fund manager just has to replicate the stock composition of the index, the expense ratio is quite low as compared to actively managed funds.
But Nikunj, while a low expense ratio is ideal, investors should also check the tracking error of the index fund before they invest in it.
Yes, a low tracking error shows that index funds returns relative to its benchmark do not vary much, which is a good thing.
Nikunj, another benefit of investing in index funds is that investors get access to diversification.
Right. Since the index fund replicates the index, diversification is built into the system.
And if someone is bullish on the long-term prospects of the index, then an index fund is a very simple and easy route to stay invested towards that belief.
Investors can consider adding index funds to their portfolio, but only after consulting with their financial advisor.
That's all in this edition of Nivesh Ke Fund Day, where today we were talking about index funds. Stay tuned for more such investment insights.
Diversified across product lines, the general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked me, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
The Wall Street snaps its recovery streak in a subdued session. The benchmark slacked near the day's lowest point as PSU banks and IT sector weigh on the markets. Autos eke out minor gains, largely led by the surge in Tata Motors. Broad indices see smaller cuts.
Profitability, we would have decided to be a slightly higher, but on the revenue side, absolutely no complaints. It's definitely a glass that is very full.
Okay. We are at 24.5% right now. Our aspiration is to get to 25% as we exit this year.
As a management team, we are focused on getting to that double-digit growth all the time. Barring certain really, uncertainties that play it, I think we should be able to achieve that.
And all continues to be well at the biggest IT company in the country. Top management says that the glass is definitely quite full as they remain focused on double-digit growth in FY24. But the stock is under pressure after the rally on Monday. Street is also digesting the rare headcount contraction and muted outlook.
Tata Motors is clearly the stock of the day as the management shares upbeat commentary while releasing strong operational updates for JLR sales. Says cash flow is near break-even when it comes to the JLR business and sees free cash flow of over £400 million. They also see strong demand for the new Range Rover.
Sona BLW also in the fast lane after it forays into the third vertical with the Novalik acquisition. Brokerages expect strong revenue growth as the acquisition is expected to be EPS accretive for the first year.
Market regulator SEBI says trading hours could be extended in case there are tech disruptions or outages at the exchanges. Adds that market participants should be informed about outages and disruptions within 15 minutes itself.
Hello, good afternoon. You're watching Markets at Noon on ET Now with me, Vinny Motiwala, along with me is Anisha Jain as well. Very good afternoon to you, Anisha. And seems like, today is not a very bright day coming in on the D Street. Yesterday surely was an exciting day. Saw some green, but today nothing coming in there.
Oh, well, yes, completely fizzled out. Yesterday, took our expectations higher, thinking that the recovery is going to be sustainable after 3 days of being in the red. We finally managed to be, for 3 days being in the red, we finally managed to show some green color yesterday. But today, again, it's back with the red color. We're at the lowest point of the trading session, very close to that. Beneath the mark of 17,950, the Sensex is just around that 60,200 mark. The broader markets are showing a tad bit of outperformance, and I say that purely on a relative basis, the cuts are smaller when it comes to the broader markets as well. Sectorally speaking, it's IT, which is languishing in trade. No surprise there. It's been led by TCS. You also have the PSU banking index, which is coming under pressure. So UCO Bank, Maharashtra Bank, IOB are some of the counters that you need to watch out for. And on the upside, it's clearly auto all the way. So apart from Tata Motors, which is up a good solid 7%, you have Sona Comstar, which is reacting to that acquisition news. So up around 7.5%. 1.5% on that one. And Motherson Sumi too is sitting with a gain of around 3.5%. So decent moves across the board. On the losing side, just wanted to highlight Bharti Airtel as well as Bharti Airtel partly paid shares. Both of them are seeing a bit of a correction today. So we'll keep track of that. And on the upside, it's Tanla Solutions, which moving on decent amount of volumes. So that's something to track at this point of time. But let's get talking technicals of the market. Hemain Kapadia as always joins us on the show. Hemain, hi, good afternoon. Thank you so much for making time and speaking with us. Well, what's happening with the market? It's one day up, one day down, really not giving us any direction.
Hi, very good afternoon to you, Anisha. Thank you for having me on the show. I think you hit the nail on the head. It's one day up, one day down. One, it's not a trending market. We saw a gap up yesterday, Anisha. I think that's the reason we've come off today. That gap up was due to US, not our markets. So we're trying to cover that gap. I believe we just made the first attempt at trying to partially cover it. So I guess it would remain a bit wobbly till this gap gets covered up. Frankly speaking, Bank Nifty was one of the bulwarks of the market it was supporting. That's walked to no correction. Now IT and Reliance did that job some time back. IT is now oversold. Nasdaq was precarious, is stabilizing. So despite what's happening in IT today, I believe IT should hold and bounce back. So if Reliance has posted a short-term bottom, if IT looks to be stable, okay, not great, but stable. So as long as the bottoms don't break, a recovery is around the corner. So frankly speaking, all of these things are synchronizing and the market is taking its own sweet time to digest it. On the other hand, Pharma seems to have posted a bottom. Metals look interesting. International copper has broken out. And to confuse things further, stocks like HUL, selectively FMCG is oversold. Colgate is also oversold. So Lever is bouncing back. Colgate probably will. So frankly speaking, it's all over the place. An anticipated pre-budget rally doesn't still seem to be on the anvil. Having said that, as long as 17,800 holds, chances are that we slowly and steadily recover. But it's going to be a jerky and a very haphazard move, Anisha.
Right, Eamon. Good afternoon to you. This is Vinny joining in as well. And, you know, given that what you're talking about, the markets, maybe a jerky move that is going to be happening here, what are your top picks then?
Frankly speaking, I'll go for contra buys. Honestly, I would have picked Intellect, but it's sort of cooled off for a day or two, maybe due to TCS. But yeah, firstly, a buy call on Metropolis Lab. We've been oversold. It's forming a small rounding bottom. The mechanical indicators have given a crossover buy. The stock looks set for a recovery. So a contra buy at 875, stop loss 845, target 915. Secondly, a buy call on Granules. The logic appears to be almost similar, Vinny. Deeply oversold, crossover buy, positive divergence. The stock has come off sharply from 380 to 315, and everything seems to suggest that we are heading towards 345, 350. So a buy call on Granules at 828, stop loss 815, target 848. Both are contra buy calls, Vinny.
Okay, Hemant, thank you so much for removing time and joining in with us on Markets at Noon, and as always giving us your picks as well. But let's move on and switch gears literally to the auto space. Now, Tata Motors JLR has come out with its Q3 update, which is actually indicating a rise in the wholesale as well as the retail sales numbers for the company. While retail sales were up on a year-on-year basis, they slipped slight bit on a sequential basis. Let's go across to Shrishti Sharma, who's standing by to give us more details on that. Shrishti?
Well, yes, Tata Motors JLR has come up with its Q3 sales update, and the numbers look to be decent this time around, considering the fact that because of the improvement in their chip shortage situation, a good growth in their wholesales number is what we are witnessing. This time around, on a sequential basis and on a yearly basis, a growth is being seen on an wholesales data. The company clocked in a sales of 79,591 units, a growth of 6% sequentially and a jump of 15% on a YY basis. Particularly in geographies like North America, UK as well as overseas, a jump has been seen, but China sales has been declined around 10% on the back of COVID restriction. But other than that, if we look at their retail sales data, then a mixed set of numbers coming in, because in Q3 the retail sales were at 84,827 units. That's a jump of almost 6% on a YY basis, but a decline of 4% 2% on a sequential basis, and the timing mismatch between the wholesales and the retails is something that the company is spotting. Coming to their order book, a jump of 10,000 units on a sequential basis, yet again a record number at 2.15 lakhs of units is what the company has logged in. Strong demand for some of their newer models. But lastly, touching on the financials, this time around they say that the free cash flow is likely to be over 400 million pounds. That's a positive number that the company is expecting this time around, because do remember in Q3 they were almost break even when it comes to their cash flow levels.
In fact, that is the positive surprise. Volumes were marginally higher than expectation or broadly in line. But this free cash flow 400 million plus is certainly indicating that there would be a decent margin improvement also apart from this volume uptick, and there could be a better product mix, geography mix, which would result into better profitability this time. Then only it can turn this much positive cash flow. Otherwise, volume improvement is relatively much lower on a sequential basis. So this also indicates that directionally now company started moving into a right direction in terms of the profitability and cash flow apart from volume uptick. As volume, we know that there is an order book pending of more than 2,15,000. So there is not a question related to the demand situation for next 2-3 quarters. Supply side constraint was impacting, but despite all this adverse situation, company's profitability will improve in Q3. And interestingly, semiconductor issue also seems to be now slowly getting much better after this China